Hey everyone, welcome back. Okay, why we have just added a new member option of which many of you have been asking for on this channel, where you can actually join the course member live streams directly through YouTube for a small monthly fee. Just look for the join button on YouTube. That's right here below. Of course, you get lifetime access with the courses, so it's a little bit different. But if you want to just pay a smaller monthly fee solely for the course member live streams where you do fundamental analysis, Q&A, whatever else, there's a join button. You can't see it on Apple devices like iPads or iPhones. You have to do it from desktop. But once you join, you can chat in these live streams, the public ones, and then, of course, free chat in the within those course member live streams. Okay, so with that announcement out of the way, let's talk CPI because today is a big CPI day. First, I do want to mention that kind of like what we saw last time, we're seeing a little bit of a spike in the market right before CPI again, which is kind of funny to see that the NASDAQ is sort of rotating from basically flat to about up 44 basis points conveniently right before the release of this report. We're not entirely sure why this is now the second time in a row that we're sort of seeing this sort of pre-spiking, but last time we saw this pre-spiking and then we actually got a good news inflation report. Now, this time, we also expect a good news inflation report. I want you to write these numbers down. Actually, you know what? I will put them up on screen for you. So you ready for this? CPI, month over month, expected to be negative 0.1. Year over year, 6.5. And CPI month over month core at 0.3 is the expectation. So there we go. That is up on screen. We are about 1 minute away from the release. JP Morgan estimates that we have about an 85% chance of being green, which, remember what I said, it makes me nervous. That makes me very, very nervous because when everybody is optimistic, it's a lot easier for the opposite to happen, right? Like some bad news. So personally, I mean, I would love to see a negative 0.1. I don't know. I don't know. We'll see. I mean, energy prices have come down, but I think the big one that we're really going to be paying attention to, or the biggest pieces we're going to pay attention to, are that the core bits into services. I don't know how much these headline numbers are going to matter as long as they come in at expectations. But if we see airline services continue to skyrocket, like American Airlines beating this morning, it's going to be a problem. That American Airlines beat this morning made me a little nervous. Anyway, okay, here we go. All right, within seconds now, and CPI month over month is negative 0.1. Oh my God, it all matches. It all matches right at expectations. Holy crap. It all met expectations. This is a complete shocker. Negative 0.1. This is really, really good. Core month over month 0.3 at expectations. It's how do people know? This is amazing. CPI year over year 6.5%. CPI core year over year 5.7%. This is actually really good because these expectations were really good and we nailed them. Now, we didn't come in at like some kind of crazy number where all of a sudden it's only like 6% inflation or whatever, but still, where we went from 7.1 here to 6.5, this is great. This really does reiterate that cooling in inflation that we've been looking for. In my opinion, this is phenomenal news. This is great. So let's go ahead and pull up the actual CPI report here in just a moment. Let's see here. Yeah, it looks like futures sliding a tiny little bit. Some saying they were really hoping for a little bit more of a decline here based on what some folks here on Wall Street are saying. That's actually really interesting. So I don't even have to change what's on screen. So there it is. We got that. That's incredible, though. It's incredible. We got that decline of 0.1%. It's just so wonderful to see that finally starting to see some of that disinflationary pressure, right? Really, really good. Then we've got, there's that 6.5 year over year before the seasonal adjustment. Great. Gasoline was by far the largest contributor. Now, probably not something the market really wanted to hear, right? The market probably didn't want to hear that everything just got weighted down by gas, but we could see that from core. So let's see here. Food index increased 0.3% over the month, with food at home rising 0.2%. Okay. Index for all items less food and energy rose 0.3. There's our core. after rising 0.2, right? And this obviously trajecting up, not so great. This still puts us at 3.6% for an annualized rate of inflation. Still well above that 2%, right? So it kind of keeps work going. You know, a QQQ down at the moment now, 0.75%. Really quite interesting to see that drop. It's almost like the market was really hoping for an even bigger drop. That's incredible. I don't know if that's just going to be short term here, short term sort of nonsense, but we'll see. Market does some funny things. All right, what do we got here? Food. 3 of 6 major grocery store food group indices increased over the month. The index for meat, poultry, fish, eggs increased 1% in December. See, it's still not good because 1% in December is 12% annualized. That's still a lot. The index for eggs rose 11.1% alone. That's insane. Eggs exploding again here. Index for food at home increased 0.4, still too hot, 4.8%, right? So you've got some food issues here. Fruits and vegetables. Hey, Mediterranean diet, folks. Come on, it's on sale. Really, really good diet here. Let's see here. Food. Let's get out of food. So we saw energy index fell 4.5% in December after falling 1.6 in November. That's great. Gasoline dropping 9.4% over the month. Really, really good, following a 2% decrease in November. But energy tends to be a little bit more volatile, right? And that's why we look at the core. The core extracts food and energy. Here we actually got a little bit of a hotter read than we had last month, which isn't great. The shelter index continued to increase. Are you serious? That's actually that's actually a good thing, though. The shelter index rose 0.8%. We all expect shelter to absolutely get destroyed, to absolutely plummet. So that is actually a good thing. If a lot of the services inflation in core is still coming from shelter, which we know is going to absolutely get decimated in the next 6 months because of all of the leading indicators, Yardi rent, Zillow rent, CoreLogic rent, all of the active rent indicators suggest a massive plummeting in this number. So the fact that we're still getting like an increase in that rate because we were 0.7% last month and now it's 0.8%, that's a sign that the leftover core inflation is being propped up by shelter. That's actually good news because we know that is plummeting. See, look at this garbage. Owner's equivalent rent index rose 0.8%. Nobody cares about owner's equivalent rent. The index for lodging away from home rose 1.5% in December after falling 0.7% in November. Now that's a problem. Okay, that's a services problem right there. That's travel continuing to boom. Not so great, but travel is a much smaller portion of the CPI increase than obviously shelter. Shelter on CPI is about 32% of a weight. PCE somewhere around 25% shelter. Shelter index was the dominant factor in the monthly increase in the index for all items less food and increase. Good. That's actually great. That is great that shelter was basically the only thing propping it up because here's what's going to happen. NASDAQ, by the way, going green now. Here's what's going to happen, in my opinion, okay? Like, you come back to this video in a year from now, you mark it down, you hold me to this one, okay? But I so strongly believe that in 6 to 8 months from now, so come July, August, September, we're going to have a negative anchor of CPI because of shelter. We're going to have this massive anchor where all of a sudden CPI is plummeting negative. And this is going to say the dominant factor in monthly decreases was shelter. And it's going to be a huge anchor. Again, 32% weight on CPI. CPI is going to be big time negative because of that. So that's great. That's actually good news that the big reason we're still seeing an increase is something we know is already plummeting. Fantastic. Among the other indices that rose in December was the household furnishings and operations. Man, people got to stop spending money on furniture. Here I am. I just bought a bunch of new patio furniture. I'm sorry. I got to get the employees patio furniture. Okay. Anyway, among the indices that rose in December was the index for household furnishings, right? Increased 0.3%. That's not too bad. Vehicle insurance rose 0.6%. Recreation 0.2%. Apparel apparel up 0.5%. Interesting. And education 0.3, medical care 0.1 after declining in the previous. That's okay. It's just relatively nominal. I mean, honestly, a 0.1% increase is less than 2% annualized anyway. Index declined over the month included the index for used vehicles and trucks, which fell 2.5% in December, 6th consecutive decline. The index for airlines, yes, okay, good. The index for airline fares fell 3.1% over the month. That's good. We want to see softness in those services, okay? That's why I have a little bit of nervousness. The fact that lodging away from home increased 1.5% in December gives me a little bit of nervousness, but I'm so grateful that we actually had an increase in the housing shelter one, because again, we already know that's such old news and is plummeting. Index for all was 5.7% core over the past 12 months. Yeah, but I wonder if you just zoom into like the past 4 months, it's closer to like 4%. Shelter increased 7.5% over the last year, accounting for more than half of the increase in core is because of shelter. Now, shelter only has about a 32% weight, but it's been so much higher than everything else that shelter is half of the core increase we're seeing, and we already know it's plummeting. Oh, that's great. The other notable increases over the last year include household. Okay, we read that. Medical care, new vehicles, blah, 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 blah. All right. CPI, blah, 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 blah. Fine. Let's go. I want to get to some of the charts here. Okay, this is a little bit of background. Let me also see what Wall Street is saying, and then we're going to get some of these other charts here. So let's see here. Top 5 contributors to month-over-month core number were rent of shelter, hospital and related services, leased cars and trucks, used cars and trucks, video and audio services. All right. Market still has a base case of a 25 basis point hike, 24% chance of a 50 basis point hike now. It looks like we are seeing treasury yields down a few basis points after jumping initially. And now they're rotating down. Gold shot up at a session high, $1,900 an ounce. A lot of central banks now packing on gold, by the way. A lot more gold getting packed on. Interest rate futures. Okay, that's fine. Okay, interest rate futures pricing in a 31 basis point hike, which is much closer to 25. So we're probably going to be getting a 25 basis point hike after this report. At expectations, it's not like some crazy shock to the downside where we're going to be getting a pause yet. That pause is going to get delayed until March or May, hopefully March. But if you've been watching my channel lately, you probably, if you agree at least with the data we're seeing, probably realize that the market's already pricing in cuts for this year. The market is pricing in about 1.7 percentage points of cuts by the end of the year, and about 500 basis points or 5% of cuts by the end of this tightening and loosening cycle. All right. Where did inflationary pressures build up? Household furniture, car insurance, recreation, shelter being the big one, again, contributing to half of this issue here. Market positioned for an even weaker CPI read. That's why we sort of had the pre-market rally a little bit, which has since faded a little bit. Indices mostly flat right now. NASDAQ now down about 0.25%. Let's go ahead and pop on into here. Sorry. That one. Yeah, there we go. Okay, so let's look at some individual services. I'm actually specifically just going to look for services now, and we're going to, let's see here, new vehicles, used cars, trucks. Okay, remember that, by the way, the far right column, let me get you the headline here. The far right column shows you the November to December seasonally adjusted change. So this is where we're going to look for a moment. Far right column, month over month, seasonally adjusted change. Let's get to, actually, if we get to the end of the report, we'll get some more services. Yep, see, look at that. Okay, miscellaneous personal services. Oh, this is great. Look at that. Miscellaneous personal services. It only has like a 0.82% weight, but down negative 0.4%. That includes legal services, which went up 0.2%, funeral expenses up 0.7%, laundry, dry cleaning up slightly. Financial services down, though. Look at financial services and tax return prep and accounting fees. These things really weighting miscellaneous personal services down. You've got educational and comm services up 0.3%. That actually has a pretty good weight here, 5.3%. Telephone services, 0.3%, a little bit, 1.8% weight. Other recreational services, that's actually a nice little boost right there. That entire group here up 1.1%. Admission to sporting events really popping up over here. Let's see, recreation services up 0.3%. So still seeing some of that services inflation. This I really like to see, though. Public transportation down 2.8%. Airfares down 3.1%. Motor vehicle insurance, I saw that as actually being a contributor, but it's only up 0.6%. It's not a big deal. Well, actually, no, 0.6% times 12. No, actually, that is a little bit of a big deal. That's 7.2%. Yeah. Sorry, ignore me saying that's not a big deal. That's actually quite a bit. So this a little bit of an issue over here. Motor vehicle insurance popping off. But what do we got here? Car truck rental plummeting now, certainly 3 months in a row. Keep in mind, this is the cutoff between seasonally adjusted, non-seasonally adjusted. So these refer to recent months. So you really just look at the three right sides over here. Transportation services, though, chilling out a little bit. We've seen this number pretty nasty. 2 months ago, it was at 0.8%. The fact that we're at 0.2% right now is great. Aligns with about 2.4% inflation annualized. Here's that owner's equivalent rent. Look at the last 3 months for owner's equivalent rent. Steady increase here. 0.6, 0.7, 0.8. But again, we know that is going to plummet. And look at that weight for rent of shelter, folks. 32.5%. And even though it weakened in the last inflation report, it actually worsened this one. So think about that. The last two inflation reports were actually deemed to be good right here. Those were deemed to be good reports, and they had both of the last two reports had lower shelter inflation than what we're facing right here in this month. That's pretty remarkable. Big boost over here. Lodging away from home seems to be relatively volatile. If we look right here, you can see how we've sat at, let's go ahead and do this. Here are the last 3 months. Hold on. There we go. That's what I wanted to, no, come on. There we go. Here are the last 3 months. And you can see 4.9%, negative 0.7, positive 1.5. Very volatile category. Contributes less than 1% to CPI. So really not that big of a deal. Rent of primary residence, owner's equivalent rent, right? These things much more impactful to the inflationary story. Tenants insurance only up 0.1%, super nominal here. Medical care services up 0.1% following 2 months of declines over here. Okay, alcoholic beverages. Oh, what a bummer. Look at that. 3 months in a row over here. Not that I ever consume alcoholic beverages here. No. But unfortunately, a lot of inflation over here. I mean, that's 0.5. You're still sitting at about 6% annualized inflation. Oh, gosh, even worse. Alcoholic beverages away from home. Oh, my goodness. That's almost 10% annualized inflation right here. This is terrible. Tobacco's negative. Personal care products, negative. Services, less energy. Not great, right? This is where we really need to see this basket fall, because you look at services, less energy, that's 57% of your inflation story. Again, the vast majority of that, though, coming from the rent of home and owner's equivalent rent here. So again, really, when you start parsing out the numbers, yes, the shelter's a disaster. I would say the one that was a pisser, where was it? Oh, motor vehicle insurance. That was the one that wasn't great. Right here. I did not like that. That's a lot. That's 7.2% annualized inflation. Education and comm services still sitting at 3.6%. Not great. Financial services plummeting. We see that with the bank layoffs. Why would analysts revise their expectations lower? Why not let CPI report crush expectations? Because analysts want to be right. Analysts want to be correct, right? So they revise, and then the averages revise, because you get you sell more newsletters if you're right with your predictions, So okay. New vehicles negative 0.1%, good. Used cars and trucks negative 0.225, fine. Footwear negative 0.2. Okay, this. Oh my gosh, apparel. I don't know how apparel popped off 0.5%. That's pretty remarkable. Especially with the inventory explosion we're seeing. Even Lulu's I think, okay, we did a big piece on Lulu yesterday in the course member live stream. Let's just say I'm not very happy. Appliances here, nominal, following last month's actually pop off there on appliances. And then, of course, we get into the more foods and energy sectors, which are very, very volatile sectors, which not so incredibly important for us to pay attention to. But you can see, the market a little bit is struggling to come to grips here with what to do. Personally, okay, and I'm not trying to put on the hat of Mr. Permabull, meet Kevin here or whatever, although that's roughly what I might come across as doing. This inflation report is great. In my opinion, this inflation report is great. I'm very optimistic about this. This is like the worst thing that could have happened today would have been any miss to the upside. Any single miss to the upside would have been terrible. And the fact that we had shelter come in at 0.8% and alcoholic beverages come in at 8.8%. Okay, that part does not matter so much. But the fact that owner's equivalent rent and shelter came in as high as it did, and shelter's representing half of the core increase, and inflation still met expectations. Oh my gosh, this is fantastic news. Philadelphia Fed hawker said central bank should lift interest rates a 0.25 point increase going forward as it did this just come out from Hawker? This is great. Yeah. Fed hawker says Fed likely to raise rates, quote, a few more times in 2023, but shifting to a 25 basis point increment. I'm not convinced about the few more times. I think maybe one more time and then we might be at zero. But then again, maybe we go to 4.75. I don't see the 5.25 terminal rate anymore. I don't see that. Not with how quickly inflation is coming down. I think it's coming down actually faster than the Fed is expecting. Let me look at the Fed term rate though. I'm not as much though concerned about the term rate because it's mostly how many cuts are we pricing in. It's falling. The terminal rate expectations are now at 5.08, still up from about the 4.9 from before Jerome Powell became a little bit more hawkish. Let's look at the 5-year break even here and see what we got. 5-year break even. Still stable around 2.25. We're basically like along the bottom of where the 5-year break even has bottomed in 2022. We're just sort of bouncing off the triple bottom that we've had for the 5-year break even. I really need to see that break to the downside to start expecting Fed cuts. I do not think the Fed is going to start cutting until that really breaks down to like 1.75 or potentially lower. So, all right, well, at least we're not going up on that. So what else do we have here? Real average hourly earnings year over year now at negative 1.7%. Prior release was negative 1.9%. That was actually revised to negative 2.1%. So anybody saying like people are making more money as like employees, well, when you consider inflation, wrong. You're actually making less money, which is, I don't know why I'm laughing. It's kind of sad. I think I'm laughing at myself more than anything. Anyway, real weekly earnings year over year, weekly year over year, down negative 3.1%. Also a prior revision to the downside, going from negative 3% to negative 3.3%. Market is trying to go slightly green here. And let's take a brief look over here. I do the pricing on the pre-market. You gotta be careful with pre-market. So let's just take a little, for giggles, look over here. What do we have? Bed Bath & Beyond at exactly $4.20. Well, now $4.19. $4.20 here. I personally think you ought to be extremely careful with the bankruptcy trending stocks. These are not going to be Hertz's. Hertz was very, very unique. Remember, folks, Hertz was so unique because they had a pileup of used cars that were skyrocketing in value. So they had what was deemed to be toxic assets that were actually delicious assets that kept becoming more and more delicious by the day. So you had a bidding war for Hertz. You're not going to have that for the Revlon or the Bed Bath & Beyond, in my opinion. It makes me very, very nervous for folks. Revlon is an interesting one. It's gotten moved to OTC. This one memed up for a while, and you get this craziness. But I remember we did a course member live, and I'm like, this is a short. This is going to zero. And it was so sad because after I did it's going to short, like within a week or so, it meme stocked to like $9. But I'm like, it's BS. Be careful. And sure enough, 40 cents now. Like the fundamentals always win over time. And it's one of the things you just have to be careful of. Like you could play the trends, but the fundamentals always win in the long term. It's kind of like ape. The fundamentals win in the long term. I'm like, this thing's going to $1. It went to $1. It went to 65 cents at one point. And obviously now AMC, one of the only reasons it popped up is because AMC has actually agreed to convert these into AMC shares. Their experiment failed. They didn't raise that much money. But anyway, look, personally, I think just be careful of some of the bankruptcy momentum plays. Play them with speculative money, fine, trades, short-term stuff, whatever. But there are plenty of companies with phenomenal fundamentals right now. Personally, I'm a big fan of looking for pricing power style stocks. I can't get into American Airlines. I've done multiple fundy analyses on American, and I just can't get past the amount of debt service that the airlines and the cruise lines have. It's nasty. I think these are horrible value traps. And while airlines tentatively feel like they have had pricing power, I think it's going away. Although that American Airlines report this morning is quite interesting, where you've actually seen American Airlines revenues come up. But we'll see. We'll see how the recession impacts some of their pricing power. So let's see here. Looking at some of the comments here. Thanks for reading, Kevin. Thank you so much. I agree. This report shows that we are on a consistent downward trajectory. No kidding. Yeah, TSMC was interesting. So TSMC and Samsung did this as well. Both of them rose after reporting weaker numbers. And in my opinion, that's because we know that in the long term, the chip companies, they have chip pricing by the balls. It's a little crude to say it that way, but like they've got a lot of control. And the chip manufacturers in unison now are kind of like slightly slowing production to basically manipulate prices higher. Now that is interesting because there was a piece this morning, I think it was in the Wall Street Journal or maybe it was Barron's, about NVIDIA chips not selling as well as they should be. So I'm investigating that. Maybe we'll talk about that in the course member live. But this is interesting. Also, keep in mind that you can shadow me for an entire day with the link down below. Yesterday, we were in Salt Lake, Utah. Today, I'm flying somewhere. Tomorrow, I'm flying somewhere. These are day trips. You meet me. We fly together. We grab food or espressos or drinks together, whatever. We look at real estate. It's a really fun day. You learn a lot about real estate. It's kind of like a crash course on real estate investing with actually seeing me go through properties. And boy, I had some things to say about some Salt Lake properties. I was railing on properties in Salt Lake yesterday. Some parts really, really great. Really happy about some parts, but others were driving me nuts. So we'll have some videos coming out about that as well. So check that out next to the links down below for the programs on Building Your Wealth, of course. We do have probably the next pricing change will be closer to my birthday. So soonish. But anyway, so okay. Bottom line on the inflation report, I am a big fan of Salt Lake versus Gilbert. Well, you'll have to wait to find out. That's a good one. But look, bottom line, big fan here. Let's go ahead. I want to look at Treasury yields quickly. Bottom line, though, big fan of this inflation report. I think it's exactly, it is exactly what we expected. And the fact that you actually, in these expectations, had yet another increase in owner's equivalent rent just shows you how blind, in my opinion, the Fed is to even remotely suggest we should still be hiking. In my opinion, it is stupid for the Fed to still be hiking when 50% of the core increase was shelter. It is stupid. but they're still going to do it. But the bond market, folks, the bond market sees it. The days are over. The days of the high yields in the bond market are over. Look at that. We just broke under 3.5 for 10-year treasuries. That's good. But that's also a sign that we have to start revving up a little bit faster, potentially, if inflation falls faster than we expect for house hack. This is why I'm traveling so much for house hack. We've got the non-accredited round coming up soon, so probably likely leaning towards March. But yeah, this is very, very exciting. So the bond market here falling is an indication that the Federal Reserve is being too aggressive. Let's go to the Fed rate monitor tool. Let's go ahead and pull this up from investing.com over here. Yeah, the Dixie will plummet. Hold on, let's see here. No, wait. Oh, wait. What? Oh, wow. Okay, wait a second. That's actually interesting. The probability of a pause in February went to 26%. And the probability, according to the investing rate monitor tool, that's not actually what we have from at least what the Bloomberg economists are thinking. So that's interesting. They might be looking at two different measures here. But okay. Yeah. We are okay. Now we're down to 28 basis points for the next meeting. Pretty much this CPI report pretty much confirms a 25 BP hike, although the market is starting to price in a pause at a higher rate than it was thinking yesterday. And if I go to March, market's still mostly considering a 25 BP hike there. So the vast majority of the market, more than 2/3 of the market, is thinking 25, 25. Although the bets on a pause are increasing. I'm booking my flight with Kevin. Hustle Smart. Dude, I would love to have you. It's a shadow experience, right? You're booking your shadow day with Kevin. And look, it's like, just watch the videos. We have a kick-ass time. It's really fun. Yesterday was so fun. So you can follow me on Instagram, and I'll try to post some more stories than I did yesterday. I'll post some more stories today. It'll be fun. But yeah, follow me on IG. So still trying to get my Starlink internet, but I do have GoGo 5G for now, so I should be able to post from the air. Anyway, all right, folks, thanks so much for being here. I love you all. Appreciate the support. I know some people watch and they don't like me, but they still come for the data. And you know what? I appreciate you too, because you know what? I don't like everyone either, okay? So, like, we're all human. We all got our own problems. Appreciate y'all. All right, folks. See ya. Hustle Smart says, absolutely, I'm shadowing the GOAT. Man, stop it. You're being too nice. Stop it, step bro. Come on, man. All right, appreciate y'all. Bye.